Thank you, Chairman Brown, Ranking Member Toomey. Thank you, Chairman Powell, for your service and your testimony today. Obviously, over the last 18 months, the COVID-19 pandemic has been the most significant shock to our economy and the financial system. But stepping back, what do you assess to be the most significant systemic threats to financial stability over the medium term, either limited to the U.S. or globally?
I'd have to say that the thing that worries me the most about it is really cyber risk. You know, it's a constant concern, and we spend lots of time and resources on it. So does the private sector, but that's the one where we have a playbook for, for bad lending and bad risk management. We have a lot of capital in the system, but the cyber, as you see with the ransomware issues now, it's just an ongoing race really to keep up, and we haven't had to face a significant cyber event from a financial stability standpoint, and I hope we don't. But that's the thing I worry the most about.
And in terms of threats to financial stability following cyber, what next preoccupies your attention or concern? The economy's coming out of this globally, coming out of this pandemic. So I would worry about if we don't succeed in vaccinating people all over the world, really, we're creating time and space for the development of new strains of the virus, which can be more virulent and more difficult to fight. And I worry that could undermine the economy and ultimately financial stability. The last thing I'll say is, we're at the point in the risk cycle where people are looking out 4 or 5 years and they're seeing pretty good economy. We're heading to I think a strong labor market, highest GDP in 7 years. This is the time when risk takers can begin to forget that there's a bad state of the economy out there waiting for them at some future date and take too much risk. And so from a supervisory and regulatory perspective, we're very mindful that it's a time when we need to keep people focused on risk management. That's a great segue to my next question, which is, given the extraordinary provision of liquidity, not just since COVID-19, but over the last 15 years, how concerned are you that credit committees at major financial institutions and others allocating capital are acting with sufficient prudence, given the easy access to capital?
Financial conditions are highly accommodative. People are getting things financed, SPACs and things like that are getting done. We see Bitcoin going up in value and down in value. So at times it's felt like a somewhat frothy market, you do worry about that. At the same time, we're very focused on the real economy. Our jobs are maximum employment and price stability, really, and also financial stability. But we've got a long way to go, so we want to be careful about tending to our main mandate while we also think about financial stability issues.
What is your level of confidence that there are not risks lurking in the non-bank financial system, hedge funds, private equity, SPACs you mentioned, given the provision of all this liquidity and the reduced visibility that regulators have into some of those institutions?
So there's lots of risk-taking going on in the non-bank financial sector. Much of it can take care of itself. Private capital can absorb losses. We know from the experience of the last crisis and the one before that there are structural aspects of the non-bank financial sector that really need need better regulation and better structures, and that's particularly money market funds, which twice have had to be bailed out in the acute phase of the crisis. I think we saw that the Treasury market really lost functionality, the most important financial market. It lost functionality significantly during the acute phase of the crisis, and we're doing a very careful analysis and thought about whether there needs to be some structural strengthening there and other aspects as well.
Turning finally to climate change. The Fed's most recent financial stability report cited climate change as a potential threat to financial stability. The National Oceanic and Atmospheric Administration, our country's foremost meteorological agency, states that impacts from climate change are happening now. They cite risks including changes to water resources, floods and water quality problems, challenges for farmers and ranchers, increases in waterborne diseases, rising sea levels that put coastal areas at greater risk. The Department of Defense
identifies climate change as a critical national security threat. What is your assessment of the risk that climate change may pose to financial stability or to your dual mandate of full employment and price stability in the long run?
Well, I think it has implications for all of those things in the long run. We're very focused on the risks that individual financial institutions are taking and working with them to make sure they understand the risks they're running and can manage them and address them in their business model. More broadly, in financial stability, financial markets generally, and non-bank financial institutions, it's much the same. We know that you know, the transition, for example, to a lower carbon economy may lead to sudden repricings of assets or entire industries, and we need to think about that carefully in advance and understand and be in a position to deal with all of that. We're doing all of that work, as are other researchers and central banks and governments around the world. There's a lot of work going on this, and it's a high priority, but a longer-term issue in terms of the financial stability. I mean, I think the manifestations of climate change are here now, but the financial stability issues are really coming.
Thank you, Chairman Powell. I yield, Mr. Chairman.